The weakness in copper right now is just because of the economic numbers that have come out in China, Europe, and U.S. Right now, as I said last week, copper is a trader's market. There's no reason why copper should be at $4.10 a pound or $3.75 a pound. We don't really even know what the supply deficit is right now. There is a deficit, but we don't even know what that is. Right now, with the economic slowdown, it seems like copper should just retrace just a little bit. It's consolidating, it's choppy. I mean, moving 1% to 3% a day is commonplace around here. It's actually been a really good trade for traders, but the Chinese don't like buying copper at this price. Given the slowdown, they like to see a 3 in front of the number instead of a 4.
So coming months, what are some of the maybe more fundamental drivers, even though you say it has been a bit of a trader's market?
Well, the fact is, like, no one really knows. Like, you have the bonded warehouses in Shanghai. Nobody knows how much supply is actually out there. We do know there's a deficit. I don't want to mislead anybody. But on the other hand, the supply in the United States has risen every month for the past 16 months. So we're hearing all these different things where there's more supply, there's less demand. We don't know what's going on. We really won't know until September what the picture is in the copper market. But I need to say also something very interesting is that the LME Shanghai spread, the arbitrage spread, is actually trading at parity right now, with forwards trading at a discount. To me, all that says as a trader is that the end users are worried about holding copper at this price, and they're selling, especially as copper has been holding up pretty strong at $4.10 a pound.
Larry, I just came back from China, and it strikes me the government is talking 8% GDP, but the markets are talking 9% plus. What's your thought, if you had a crystal ball, if the government was right at 8% rather than the markets at 9%, what effect would that have on the commodity prices?
If I had a crystal ball, and if you were correct, which I tend to think you are correct, the commodity prices long-term will go higher, especially with the cheap money that surrounds us. It's just not America. Excluding Australia, I mean, on a notional basis, money is really cheap right now. I can't see why commodities over the long term would not increase.
On the gold price, can I ask you about that specifically? Do you include that in the comments about commodities that can rise? We did have Ben Bernanke indicate perhaps no third round of quantitative easing, and if that's true, that would be a setback for gold, wouldn't it?
It would be, but gold's very interesting right now, and you can see where it's consolidating, not doing a whole lot. There's no conviction. It's looking for a focus. No QE3 right now. There's no real economic data in the United States coming forth. You have Europe, who's found a bigger rug to sweep all the Greece problems under. And then you have OPEC saying, well, gee, maybe we'll increase supply, maybe we won't. So gold's not doing anything at present. But as long as money stays cheap, and as long as governments are borrowing, I can't see why gold shouldn't rally long term.
All right, and other safe havens today, we're seeing traders seeking out the safe haven currencies. It seemed to be sparked by this report that the EU, the IMF, the ECB, said that the next round of aid to Greece couldn't really be given unless it corrects the underfinancing in the adjustment program happening in Greece. I mean, one day this is an issue for optimism, the next day it's an issue to scurry to all the safe havens. How do we make sense of it? What do we take away from it all, from this issue?
Yeah, well, Europe to me is the 800-pound gorilla, and I just can't believe how the euro currency continues to rally. It's something that I've been completely wrong on, but they just keep building this bigger rug, putting all the problems under that rug. Sometimes it's hard to believe that a country that's being told what to do by a foreign power when it comes to cutting or raising their VAT taxes, cutting public sector jobs, privatizing everything known to man, that's going to end well. I just cannot believe it. The safe haven to me right now, long term, would be the Canadian dollar, the Australian dollar, and the 10-year US Treasury.
Okay, and what do you actually feel, though, when we're talking about Greece as some of the, I don't know, the overriding objectives when it comes to that discussion? Is the end game the same regardless, maybe I should ask?
Yeah, you know, I just can't see this whole thing ending well. The debt they have is so large, and I think the EU is doing whatever they can to save the EU. They're trying to remain solvent. They're trying to keep the banks in France and Germany from taking a huge haircut, which will end up having $140 billion. Somebody's going to have to pay for it along the way. I just can't see it ending well. I'd love to say that I'm wrong. I just don't think I am. There's just too many things going on there that's pointing the finger at Greece. It's just not going to end well. I've been wrong so far. Long term, I just think until they get this figured out, I would not be exposed to any kind of European securities, nor the euro currency at 146. It's just unbelievable.
Larry, quick one. I've been wrong on the euro, too. I kind of scratched my head on that one. The other one I scratched my head on is oil. And I've been scratching my head for a long time on oil. Yeah. But, you have a slowing economy. You have all these numbers coming out, putting pressure on equity markets. I mean, any thoughts on oil here? It's such an important, obviously, commodity that runs through the lifeblood of most economies.
Yeah, Greg, that's a great question, because that's one thing Bernanke inferred yesterday. It's that this one-off inflation was oil, and oil's rallied 160% since 2009. It seems to me that given all our problems, given all the mainstream media focus on the price of oil, the fact is the BRIC countries are using more oil, and $100 a barrel is not going to kill us if we can keep it at that point. That's where it is right now. Long term, we don't need it any higher than it is right now, but I do think it's going to remain right within $100 a barrel.
Thank you so much, Larry. That's a great commodities update for us today.